Good evening and welcome to the Australian Stock Market Show. In tonight's show, we'll look at tech stocks, which ones we believe are the hottest and next in line to rise. So get ready as we share with you how to set yourself up for the next bull run. We also reveal 5 tips to help you buy at the safest time so you get the best gain with the lowest risk. Hello, I'm Janine Cox, your host for tonight, and joining me is Gillham, and we're Australia's most trusted stock market educators. How are you this evening? Bit tired, bit weary?
I was, yeah. We had a staff conference end of last week, and so I didn't get a lot of sleep and too much alcohol. So it's a bit of not enough of something and too much of something else. But I'm okay.
I thought you were going to say too much spicy food.
No, just a conversation.
Oh, really?
Yeah, spicy conversation.
Okay.
I'm not going to get into that, Janine. We've got plenty of great stocks to look at tonight. So I looked at your workbook, sneaky peek of some really hot stocks.
We do. And now my quote for tonight comes from American billionaire Steve Ballmer, who said, "The number one benefit of information technology is that it empowers people to do what they want to do. It lets people be creative. It lets people be productive. It lets people learn things they didn't think they could learn before." And so in a sense, it's all about potential. And we are 100% behind that, as at Wealth Within we use technology to remove barriers and empower anyone who wants to learn and get a fair go. We firmly believe that no matter what point you are at now, that you can increase your potential to build your wealth in the stock market.
So true, isn't it? It's like, the technology. I was only chatting yesterday with somebody about being a guest on Talking Wealth, and they were talking about education because they're in that field, and they go, "How long you been? Do you do it online?" I said, "We've been online with our education for 17 years," and she says, "Oh my God, you're a pioneer." And it's just the best way to teach. Even though I know a lot of people say, "I want classroom."
But once they experience
what they do and the whole thing, not just it's online and you're just reading a PDF, but all the whole experience, the interactive experience, it just blows everything else away. So to me, that's 100% true, that statement.
That's right. I think it's more about they need to feel connected or supported.
Oh, absolutely, and that's the part. It's that human relationships,
over.
that connection, the mentoring we do, and all that stuff behind it. And I think you need to experience it. But yeah, great.
We know you are sitting there with questions and we have answers. So now's the time to call into the show and ask your questions. Finally, I get to talk to someone other than Dale on the show again, which is great news, so call in. As you can guess, I'm really looking forward to having a chat with you. Call 03 9290 9988. That's 03 9290 9988. If you prefer to text, send your question to 0423 959 846.
Now, to get things started, the first person that calls into the show right now will actually get a free copy of my second book, which is called Accelerate Your Wealth. So make sure you pick up your phone and get dialing 9290 Now, while we wait for you to call in, it is the 4th Tuesday in the month, and that means we take a look at world currencies. No, world markets, isn't it?
World currencies.
Let's get into the charts.
You've been playing around with my computer again, haven't you?
Is it markets or currencies?
Currencies.
We're in currencies.
Right. Okay, so this is actually really interesting. So the Aussie dollar's been falling, as we know. So the list here, we've got Aussie dollar versus the Russian ruble. The only one...
I'm always excited to see what that's doing.
The only two that we're up against at the moment, or compared to the Russian ruble and the Japanese yen, we're up 6.67 to the Russian ruble and 3.13% for the whole year to the Japanese yen. But everything else
we're down again.
Is a sea of red. So look at us against the US dollar, we're down 1.36%, which is not huge, but when you look at the chart in a minute, you'll see that it's actually not going in the direction.
Well, it's 66 cents, so that's not too bad. We want to be around that 70-cent mark, don't we?
Yeah, it's getting a bit low, isn't it? I mean, I remember them talking at one stage that they'd like it down at 65, 62 cents. Anywhere down, if it gets down towards that 65, 62 cents, then that's when the RBA will start looking at their policy.
And obviously $1.05 New Zealand, that's probably, I'd like that normally about $1.10.
Yeah, so that's actually quite low, isn't it, at the moment? Down 1.46%. The Aussie dollar versus the Hong Kong dollar is actually down 2% at the moment. And so across So Singapore dollar as well, pretty comparable with where we are against the Hong Kong dollar for the year. Aussie dollar versus the Canadian dollar down 2.76%. So look, I mean, Aussie dollar versus the Swiss franc down 5.29%.
So why is our dollar weaker?
Well, look, I mean, recently
Is it commodity
there's been,
prices, or is it a bit of interest rates? What is it?
well, you'd think so. It could be a bit of everything, but you know, in different quarters, people are focusing on the employment data,
Yeah.
and then try to preempt the retail trade information. But I mean, our retail trade is so different at this time of year compared to the second half. So I don't really understand the you know, how they can argue that, but. I'm sure there are smarter people than me out there that are working on the currency side of things.
Well,
and
there's
that's their
definitely people
expertise.
smarter than me out there doing it. So I'm agreeing with you. So to me, it's like looking at this. But I think, you know, as our commodities start to rise, which we're expecting it to over the next sort of in the second half of this year into the next couple of years, I think that'll rise. I think that'll start changing our position.
Yeah, I think it will too. If we just have a quick look here.
What are we going to look at?
The Aussie dollar versus the US dollar. So you can see this is the monthly chart, big picture. We're well down on historical averages. If you draw lines across here, you know, this is where sort of around that 75 cent mark is where our currency spent a lot of time, and we're well below that right now, as Dale was saying before. So it just doesn't look good, does it, on that chart at the moment, the way that it's pulled back.
No, it doesn't look strong, but then, you know, if the US defaults on its debt, don't raise their debt ceiling, that could change the picture pretty quickly.
It definitely could. So, you know, at the moment, these lows are all together around 65. If it takes out those lows, then as I said before, we're heading down but somewhere below 65.
Okay. All right. We'll see what happens, Janine.
All right then, that's our thoughts on the world currencies. If you want to participate in this show but you can't see it live, you can email in your questions ahead of time to info@wealthwithin.com.au. If you love what we do and you want to watch the extended version of this show, it will be available on talkingwealth.com shortly after we finish the show tonight.
If you are not already a subscriber, make sure you take up your free 7-day trial to find out why subscribing to talkingwealth.com could be the best decision about enhancing your future you've ever made. Talkingwealth.com is not just about building your wealth. You hear from experts in their fields, including the stock market, property, and other investments, wealth building strategies, estate planning, super, precious metals, career and job hunting tips for a healthy mind and body. And we all need more of that, don't we, Janine? All at your fingertips. It's just so easy to get started. Just head over to talkingwealth.com and subscribe. Now, Janine, let's get into your first email question for tonight. Now, we have an email from Craig who says, "Hi, Dale and Janine, I have a question regarding keeping stocks that are currently under offer." He goes on to say, "I currently hold Origin, ASX ORG is the code, and I am in a profitable position. Since the potential takeover announcement, there is still a small upside to potential takeover price, around 8%. However, the takeover may not be complete until next year. Therefore, would you just normally sell the stock and put the money into something that could make more than 8% over the next 6 months, or keep hold of the stock until the takeover goes through and pick up the extra 8% plus dividend?" Great show as always. Many thanks, Craig. Good
Well, this
question.
is a really good question. It applies not just to Origin but lots of stocks, doesn't it?
Oh, it's a common question we get. When anything that we do, any sort of takeover announcement that we do get a lot of people talking to us about what they should be doing about the stock. If they're currently holding it, do I hold, do I sell, what do I wait for? And everyone's really different depending on the offer, isn't it? Like sometimes they'll get special dividends, sometimes you might get extra franking credits, sometimes you might be getting shares in the other company, other times you might just be getting paid out cash. So everyone's a little bit different. So
yeah, I mean, if you're a trader and you were looking at another stock that was about to take off and you had that money and that was the only money that you could put in,
I'd be in the other stock.
You'd be selling this one to buy the other one.
Absolutely. Because I mean, it's like 8%, you go, okay, 8% is nothing to be sneezed at, but then that's not guaranteed anyway. So what happens if the offer doesn't go through the ACCC or whatever else? Then the stock price will come down. And he says, and there's some words there, he said he's in profit now since the takeover. So I'm not sure whether he bought it just before the takeover, and obviously that took it up and is in profit.
Yep.
So I'm not sure, but I mean, again, or maybe I'm just reading between the lines, but I'm just suggesting is, because obviously they're talking about the offer being next year, the whole thing being done by next year, but it's not. I think Origin has agreed to it in principle, hasn't it? They've signed an agreement for it in principle, and it's just waiting on to see what happens.
It's just the usual channels that has
just
to go
the normal
through
stuff.
now.
So do we want to look at anything or?
Look, I think from a charting perspective, just one small point to make is that often these things do happen where the stocks, because it is sitting quite a way below, isn't it, from where the offer was?
Well, it is a little bit, yeah. So it's, as you said, there's about an 8% extra on that.
Yeah, and often stocks can drift lower. So because people obviously can put money into other things, they're thinking the same way. And so the shares can drift down a little bit, but there are always institutions looking to get that really small clip and the arbitrage on these takeovers, so they tend to track around the same sort of levels.
Well,
it's only if something happens that comes out of left field that could smash the takeover on the head that would cause it just to drop out of bed. But then it's important for any investor to do their reading and read up on what's been said about it around the time that the announcement was made.
Well, that was my question. It's like, if you own the stock, who's going to want to buy it when they know there's a takeover? You're buying it for a possible 8% upside, but the risk that it could be a pretty sharp downside if the offer gets rejected.
That's right.
So why would you buy the share? So there's got to be some sort of incentive, doesn't
Yeah,
it?
well, that's right. It's the dividend in there that often investors hang out for as well, but then you've got to weigh up what that means to you.
Oh, okay. So so what's happening at the moment with this? It's obviously it's the ACCC.
Yep.
And there's an offer for it at the moment, and what they're suggesting is next year it'll all get happening.
Well, I hope it doesn't. You know, have my feelings on all of that, but
I know
I think there's probably at this stage that there's probably a slightly higher probability of it actually going ahead.
Oh, okay. So how about we go and have a quick look? Have we got Origin stuff up here on the charts? No, we haven't. Okay. I thought I was going to go to look at the Origin website, because if you look at the announcements, and this is something that I should suggest that he does, or Craig does, is that he actually goes and has a look at it, because you'll have the whole timetable of the whole what's got to happen in terms of what decisions are happening, when they're happening, and
but
what
then
the
you
offer
sort of
is.
twiddle your thumbs and you're sitting there waiting. So I can understand his question, because you're just wondering what's going to happen, and it's so far out, isn't it?
But that's what I'm saying, is why would you sit there and wait? If you think the offer's going through now and the board said, yep, we're doing it, it's all signed off, well then the decision's pretty simple, isn't it? It's like, well, it's all signed off, this is guaranteed, get out, done deal.
That's right.
You know?
But I mean,
because it's in limbo.
Look, it was an opportunistic takeover, in my opinion, given where the gas industry was and is. So I think, you know,
personally, I'd just get out. I would just get out and go somewhere else. That's where I'd be putting my money. But
all right, let's not talk about this one anymore.
Why not?
Annoying.
Don't you like it? Because you get you upset because it's been
does.
taken over by an overseas company. But anyway, so can we move on now?
Can we?
All right. So we've got a text now from, it looks like Julie, and Julie's asking us about VVA. Now, VVA, she says she's bought it 2 years ago and she paid $3.04 or $3.05. And she says, any advice, please, as I'm stuck. Thoughts? She's stuck.
Can I tell her the good news or the good news?
Well, how about you just tell her the good news?
Okay, I'm looking at this and thinking, look, it's doing everything that would indicate that there's a potential that it stopped falling.
Well, she's bought it at $3.05. So she's way down on the price. You should have got out of it a long time ago.
I'm sure she knows that. Are you trying to rub salt in the wound?
Well, sometimes that works.
It doesn't.
Doesn't it? Why not? So
it's about where to from here, right?
So what's the good news?
The good news is that it's consolidating. So often when a stock is trying to find a bottom, you'll see these lows really slowing down, and that's what we've seen here. And there's actually been some higher peaks there.
Yep.
And then it seems to have stalled. I don't know what was the action here, but I would actually look up to see what was happening around the 24th of February that week. Find out whether there was any important news that is material to the share price, or whether there's just someone's playing with the stock, because we can see a huge amount of volume has gone into that right at that low there. Now volume is still low, but it looks relatively consistent over time. we've got this little pattern unfolding, which these beautiful little patterns, sometimes if you get a breakout to the upside, the stock could take off. But I guess that all I'm saying is I'd be very careful, because if it goes below that 12th of May, it's not necessarily a good thing. We're looking for potential for it to take out that low there on the monthly chart, which is the February low. But if it goes off on the upside and takes out that high of the 7th of April, which is $1.31, then we're talking about upside from there. And I don't know about you, but I just like the way that it's unfolded, and there's the potential for that to be the low at the moment.
But this is a good example of why you need to have stop losses.
Definitely.
Because obviously she's been holding it for at least 2 years, probably maybe even 3 years. And really it's about a third of the price she paid of it. So the method could also go sideways, but you don't know. What you're saying, she's already suffered the pain, so
yes,
there's probably no more downside for her, but if there is, get out.
Yeah, look, I mean, I'd see that there's a potential for it to get up somewhere between 150 and 160. You know, I know that's not huge.
Is that giving her hope, or?
It's giving short-term hope, and this is like one of those propositions that you have to go, you know, week by week and then month by month if it does start to recover, to work out where you're going to say, well, look, I'll draw a line in the sand and that's going to be it, or I'm going to hope for a little bit more upside and let it move around a bit more. So it's just, that's why it's terrible for her to be in this position. That's, you know. It
is, and that's what I'm saying is this, you know, it's a great example. I mean, to me, the suggestion is buy my book, because she won't ever have that happen to her ever again if she follows the rules in my book, because my first book's still available for free. You just got to pay the shipping. So if you haven't got it, get onto our website and do it, because, again, nobody ever worries about stocks going up. It's always going down. So you need to have the rules for that.
It's these sort of things happening that often inspires people to get the training.
Well, hopefully, because as we see, stocks like this can decimate your portfolio if you have enough in them. Sometimes when people put money into stocks like this, they need to put a very small position sizing so it doesn't decimate their portfolio.
And sometimes these are broker tips, so you just don't know.
Well, it's probably a broker's tip. What do you reckon? But anyway, let's move on anyway, Janine. But it is time we get into our topic for tonight, which is all about whether there is still time to buy tech stocks and which ones we think are the hottest right now. This year we've seen a 20% rise in the sector. So we felt that we had to share with you our thoughts now, as the time really is right. One of the questions we always ask is which tech stock will make the most money and which are next to rise. So we'll share the hottest stocks in the sector and reveal 5 tips to help you buy at the safest time.
What's interesting to me is that I've found so many investors are struggling to stomach tech stocks after experiencing hefty falls in the past. What I know is that when you feel this way about an area of the market, this will often be the best time to be buying, or at least getting ready to do it. So Dale, tech, in my book, means opportunity for growth. You just need to pick the right tech stocks at the right time.
That's pretty true, I reckon. And I know you want to help everyone with tips on how to do just that. So just before we do, Janine, how about we share with everyone how they can have a bird's eye view of what's going on to help make things a little bit easier for them?
Exactly. I can do that, as you know. I cannot wait to jump into the charts. And I'm really excited as the tech sector's moving and has more to go, which is why I want to bring up the sector so we can narrow things down so that we can identify where the best tech stocks can be found. Firstly, it's important to know that the infotech sector is subdivided into 3 subsectors or industries, and we've hand-picked the most liquid stocks from each of those. Now, you can also find tech stocks in financials, real estate, communication services. So, are you ready? Now's the time to take a look at the information technology sector.
Okay, so we're bringing that up. So that's XIJ.
Yep, XIJ. Now you can see there on the chart that we've got a decent rise that's happened here. So we've been watching for every month we've been watching the tech sector to see this move up. And
well, it's up 20% this year. Yep. We know that.
Now, but really, even though we can say it's been up 20%, nothing really much has happened until the last week or so.
Well, yes, the last month.
Because this is just a sideways, what we call a sideways consolidation on the chart.
Now, the problem with the tech sector, though, is it's CPU, mainly Xero as well. What's the other one?
Well, the drivers have been Xero, WiseTech.
WiseTech,
another
that's
one.
the other one I'm trying to remember.
Yeah, we're going to take a look at those anyway.
Two of the waxy stocks.
Because a lot of people will have those on their watch list.
Correct.
And even if they are not buys right now, it's important to keep some of these stocks there just to have a look at, or at least have the infotech sector on your watch list so you can just sort of make a judgment as to whether the run's likely to be over. Because some of these tech stocks actually haven't been falling, they've been continuing to go up.
Yeah, correct.
But, you know, ones like Xero or Xero were hit really hard, and the chart of the information technology sector really shows that stock because it's the heavyweight.
With Xero, for the people that have been watching my market report on Monday on Talking Well, I was talking to them about Xero about 5, 6, 8 weeks ago when I actually did the tech sector, and I said, watch this stock and start looking at it. And we had a look at it again yesterday, the tech sector, and looking at what's turning and what's ready to look at as well. And I was showing them what that. So if they'd done their research, they would have jumped onto Xero, that sort of stuff.
Well, look, some of the tech stocks, as we said, can be found in other sectors as well. So it's not just the information technology sector that people should be looking at. And I think that sometimes in the media that there's this mix of infotech and telcos and fintech stocks get sort of thrown in together.
They do.
So it doesn't really matter whether it's in this sector or in one of the others. They're generally, if they're part of that, shift, and if the big funds are looking at that area of the market, money will go into them, and that's what really drives these sort of moves.
Well, it is, and it's interesting, looking at that sort of big picture, which we need to do with the index. We need to look at that, and obviously we need to make sure that we're driving it down from that. We do look at, what you're talking about is more of a form of top-down analysis. So, we're looking at the sector first, then looking at where these stocks are, in what industries, what they're in, and then start breaking that down into finding out what we should be looking at and what's going to move and what's not going to move.
Yeah, exactly.
And obviously, that we're looking at all the developments in those different areas, because I talk to people. The last couple of weeks I've talked to a couple of people in fintechs that are releasing apps in fintechs.
Yes.
One of them's got 70,000 subscribers of the app, and he's in Melbourne. I had coffee with him the other week, and I met him first 8 years ago. We were starting to build it. Now he's not listed, so you can't buy into it, but to me there's some really exciting stuff, and I've had lunch with another guy who's
and that's the challenge,
fintech
because a lot of these tech stocks can be really small stocks and not suited to a lot of investors. So they have to be careful, because they can end up buying something that does what that other stock did that we just looked at for Julie.
Yeah, absolutely.
Okay, Dale, so our analysis is indicating further upside, which means there's money to be made if you pick the right stocks.
Well, of course there's money to be made, but looking for that, you need to... I know a lot of people with tech stocks, they want short-term. They're just looking for day trading short-term, which I think's not necessarily wise all the time.
I think a lot of investors are wised up a little bit because of that big correction that's seen on a lot of tech stocks. They're thinking, well, maybe my thinking about buying and holding wasn't quite right for those type of stocks.
Yeah, I'm talking about the other end. Buy and hold, no, for most tech stocks, because they'll be too volatile, but trading over days, that's also really fraught with danger to me too.
Yeah.
You should be looking at more position trading on those stocks, but looking more 3 months to 18 months in that sort of bracket. That's what I'm thinking anyway, but that's my thoughts, Janine.
Okay, now Dale, we want to help people make better, more informed decisions when selecting the right stocks. So now we'll share our 5 tips to get you on the right track and not only select the best stocks, we're also going to walk you through the do's and don'ts while looking at the charts to help you determine the safest time for the best gains.
Okay, Janine, everyone wants that, so how about we take a look at it?
All right. Okay, we've got 5 tips. So be ready to write these down. Number 1, understand the risks and volatility. Select stocks with a market capitalisation of greater than 500 million if you're new to the market. A company's market capitalisation, or market cap for short, means the value of all shares on issue or size of the company. A lower market cap or higher risk does not necessarily mean higher reward. It means higher risk. And when you buy these types of stocks, your focus is about protecting your money, growth, not income. So dividends are a bonus. Number 2, the time frame for your trade is really important because of volatility, that these stocks are generally not good buy and holders. They do make good trading stocks and can make you a lot of money with the right approach. 3, skill level is important and is medium to high. So you need the right training for volatile stocks, to learn discipline and to be confident with your rules to buy and sell. Number 4, have good rules. Use medium-term confirmation for your prior to entry, for your entry as well, included in it. And too aggressive on the entry means that you'll make your broker rich, not you. And you can use aggressive exits, but they must be tested. Number 5, document your plan and review your strategy. Would you like to add anything there, Dale? I left a space for you.
I'd say get educated first. Probably, but the thing is that we find a lot of people that trade tech stocks and those micro cap stocks or even mining stocks, they're the least educated, but they should be the most educated. Everybody gets an ass about.
That's strange, isn't it?
I mean, it's just normal because they think, it's a tech stock, and they get excited because they've seen tech stocks like Afterpay and Z1P and those sorts of stocks.
So many of those stocks really got hit hard.
They do.
WiseTech's done really well, which we'll have a look at.
Look at Appen.
One of the wax stocks.
How long's Appen been going down?
Yeah, that's another wax stock, isn't it?
Yeah, it was one of those other wax stocks. So people made some money quickly out of it, and then they thought they could do that across the board, and it doesn't work.
Well, we'll have a look at an update on that one as well, just to see how that's tracking.
So we can do that then.
So remember, these tips are so important to your success, and we've got loads more shortly as we reveal some of the best stocks. Remember, if you see yourself being more of a trader, we help you to be confident in the market, which is vital to your success. To find out how, have a chat to one of our education consultants. They're traders and they've completed our courses, and so they're more than qualified to help you decide on the right path.
Yeah, so true. But not wanting to be impatient, Janine. I think everyone's hanging out to find out.
That should be your middle name.
Mrs. Dale Impatient. They want to find out our thoughts on the best tech stock. So can we just get into it now? Is that okay?
So glad you asked. Let's do this.
Okay, so we're on. Let's get on to Optima.
Have you been playing with the keyboard again?
Well, yes, I'm sorry. I slapped my wrist and shut me at the door.
Okay, there's no violence required. All right, now this is one of the first wax stocks, right? Now, clearly
so this is WiseTech, correct?
WiseTech. Now, the reason I bring this up is because some of our viewers have written in about this in the past.
They do.
So it's really important to give an update. So we've seen really great opportunities to get in probably a couple of months ago, I'd say. And now it's a matter of just waiting. But if you have Dale's book, there's a really good strategy in there that could be used to manage the risk on this share. You can just see it standing out, how it trends so beautifully for a start. So, but this is producing some really nice gains now, and I think it will again, but just wait for the next pullback to unfold. I'm expecting that it may go up a little bit further, into the high 70s possibly before it pulls back. But once we get a pullback and it comes into the range of this previous movement, then there'll be a really good basing that will occur before another move up.
Yeah, down to sort of low 60s, high 50s.
Yeah, so I'm flagging this one well ahead. So people will think, but it's not ready to go right now. But that's not the point.
That's not the point.
The point is to say, okay, this is a really good stock. It's in that space that's going to be in demand. It's done exceptionally well while other stocks have been falling.
Well, that's a good point though, Janine. To me, trading the market is about hunting the market, not following the market. And what I mean by that is most people, again, get it asked about. They're trying to find stuff that's going to trigger today, and all too often that's already triggered, and then they jump in after the run's already started or halfway through or 3/4 of the way through the run, and then they go, oh shit, I just caught that stock. It went up a bit more and then it tanked away. And then they email in us and go, what's happened?
Yes.
And we go, well, you should have thought that before you bought.
Exactly.
But the best traders are stalkers. They actually have a whole watch list, and it doesn't need to be huge, but they just wait, and they have the patience, and they know when a certain set of rules trigger that they get in at the earliest possible time, and then they take the run.
So look, I mean, this tends to go up for maybe 4, 5, 6 months and then down. So we've already had 2, 3, 4, 5. I mean, we could see it go up for another month or two, and then I'd expect that it'll peak out, come back, and then we'll get the next really good opportunity from there.
Oh, absolutely.
So that's WiseTech, one of the WAX stocks, $24 billion company. Again, huge liquidity there, so that helps reduce the risk, and just the beautiful way that it trends. You can just see that on the chart. Appen is another one. It's much smaller. So this is one of the other WAX stocks, 342 million. High risk in our book, so I've put that at the top of the chart. We did look at this one recently.
Last week, I think it was.
And I think, it's what's important to talk about today is the fact that it's holding on and it may actually recover from here. So sometimes stocks slip out of these lows. We did say that at the time we poo-hooed it and thought, well, now that it's taken out that low, that, we wouldn't be interested in that stock for quite a while. But in saying that, if we just have a look at the angle of this trend down here, like from the top there, we can see that at one stage it had some really nice trend angles, but then it seems to have flattened out. It's getting flatter and flatter as it goes down. So much harder to use a trend line to then enter, which is why you need more rules in your kit bag to be able to trade these types of stocks.
Well, you do. And one of the things, actually, I think I had a quick look at this yesterday on our Monday report. Well, actually, I did have a look at it. But you're looking at this, and we've had, multiple runs since that high there back in August 2020. So we're nearly 3 years down the track. We're a couple of months off being 3 years, or 3 months. But it went up for a few months, a few weeks here. It went up for a few weeks here. It went up. And people were trying to get into it thinking it's hit its bottomed all the way through here. And we've had a lot more recently with these little runs saying, I want to get into it. And these are big runs, some of these. If you're looking at this one from there, I missed it, from there to there, that's like 50% run, this one. And people are going, I need to get into it. And that's what I was saying before is, look at the volume here on this. A lot of volumes coming through here, and people were getting in it, they seeing it already move. And that's what I was saying is, you've got to get in really and stalk the market, and they bought in only to see it trade away. And then it went up again, and if we look at this next one, it went from that low there up to there, and here we go, another 46%.
And that in itself, the fact that it's repeated that percentage shows you how contrived things are. Like, and that means to individuals, well, I might get on my soapbox about that. It means to you that you're going to have more, reliability to be able to trade these stocks when they do run. Now, I mean, we mentioned some of the points were to go for stocks that were 500 million and above, ideally. Now, this is less than that at the moment.
Less than that.
But it doesn't take much in terms of the share price to move up for it to get back into that range. So while it might not be one for the watch list right now, I'm
watching. It's on my watch
list.
Look,
I know you hadn't written it off, but but the other day we both said, well, now that it's taken out that low, it's telling us we need to just let it go for a while and wait. Because we were getting excited about it when we saw these moves up here, and there was an actual entry in there and everything.
But I would rather, and this is where I talk about on my market reports on, quite often, is I'd rather give away this whole 40%, and people go, "You're crazy." I went, "No."
So this is So sorry, keep going.
Yeah, because to me, this is whole sideways movement. I'd rather get in above these sorts of highs if it's showing me strength, because whilst I'm giving away, maybe 40%, if it goes up to here, $5, $6, $7, $8. There's 40, 50, 100%.
Yeah, and that's the reason I'm putting it back on the list, because that level is such an important level to mark a line in the sand for this share now that it's got that there. So I haven't written it off completely, and given it's one of the WAX stocks, it will always get some sort of attention in the media. And I'm not to say that I'm following that, but that's why it'll often be on brokers' reports.
One thing I want to say before we move on to the next stock, Janine, is some people will go, I'll just buy it now when it's at its low point down at this $2.30 odd mark, just in case it does that. And to me, that's just
crazy
stupidity.
So, I mean, I'd even wait for something, we were talking about before what to wait for a stock before you get into a stock. And I mean, there's nothing, I'd be waiting for something on the monthly time frame that I can see that's giving me evidence that level we talked about was important, but it may actually show something up here in the next few months that
it could, but it could also halve in price from where it is.
It could do, yeah. But look, let's just leave that one for now. I think we've got other ones to look at.
All right.
Pay attention to.
I've been told to shut up.
One of the other WAX stocks is Altium, ALU, market capitalisation of $4.9 billion. It's really choppy.
It is
right at the moment.
But it's
Now,
looking all right.
It's just, look, I mean, if it takes off, the beautiful thing about this is that if we look at how that's risen, we can see there that there's an angle, a nice little angle all the way up there, and it's underneath that line at the moment. So what that means is if we put we put some lines across here, and we've got the trend line in there, we can say, okay, if this stock starts to get above that line, it's going to start to look interesting again. So the thing to do is to mark, if you've got, your charts there, is to mark them up and say, well, I'm not even going to look at this until it breaks that line. You may even, in Optima, they allow you to set alerts, which is great. Yep. So you don't have to worry about looking at a whole heap of charts. I remember when we did a live workshop once, and this gentleman came up to me and he said, I've got to look at 200 charts a week. And I said, no, you don't. You just need the tool that's actually going to help alert you to where the action is. So, but if this moves back up above there, then we're talking about a stock that's likely to take out that high. So if some of these tech stocks starts to run, then we could be going up. But obviously a move to continue down below this low here, and that's the opposite view on the stock. So continue to watch. Now, I could have done Xero as the fourth stock, because that would have meant that we've done all the existing wax stocks, because APT is not a part of that anymore.
Hang on to that till after the break. Is that what you're telling me?
So I decided to choose something outside of what we were talking about, which is actually PEXA Group, which is actually in the real estate side. So this is something that I'd consider to be tech, because it is, software related, and it's actually part of the property. When you buy a property. So when you buy a property and you're trying to settle a property, this software is actually used. The solicitors will tell you that they're using this software to help as part of the settlement process. So we're looking at a pullback down into this low here, 3rd of March 2023, and it's risen up off that low.
So why are you excited?
I'm excited because there's a bit of a setup happening here at the moment, right? So it's a $2.3 billion company. It's been trading down for so long. It's been in the doldrums, so a lot of people are probably not looking at it. But look at the volume. While it's in that basing pattern, it's actually really solid now, this volume here. So that's got me questioning as well. So there's a couple of things going on. One is it seems to have stopped falling. Doesn't mean it has, but
so
it
this
appears
could be an accumulation phase by
there could be someone
players.
accumulating the stock. I'm not sure what's going on there, but the fact that it's moved up now, I'd be, this looks really interesting to me. So, but it's about making sure that you've got momentum behind you, and that the rise is actually happening, not to try to second guess this, before buying it. It's just too risky to do that.
Okay, so we got any more? What are we doing now?
Okay, so that's our 4 stocks that we've got at the start. We've got another we've got a baker's dozen after the break to come up.
Okay, so you got more.
Yep, and for our regular viewers, that we've got loads more stocks to come, as I said, and we have a couple of interesting dark horses in there as well. And there's lots more to learn, so keep watching.
Now, Janine, I have to say you've picked a few dark horses lately that even got me excited, I tell you what, and I'm excited to see what's next, but we do need to go to a short break. But before we do, for those watching on YouTube, it's been great to have you with us, and thank you for joining us into this show. Now, if you do want to participate in the show, you can email your questions to info@wealthwithin.com.au. Also remember to head over to talkingwealth.com and sign up for your free 7-day trial so you can gain access to all of the content in tonight's show in full. We cover lots more stocks and answer a lot more questions, so head over to talkingwealth.com right now.
And remember, you also get Dale's predictions for the Australian market, along with hints, tips and other things such as what stocks and sectors to look. I just about got that tongue-tied, to look at each and every week in his Australian stock market report. Did I give you a good rep there?
No.
No.
Keep going.
This all on talkingwealth.com. For all talkingwealth.com subscribers, just relax and stay tuned, as we'll be right back after this short break with more stocks and more of your questions to answer.
In this week's Australian Stock Market Report, I'll share with you why now is the time to invest to set yourself up for the next bull run. Right now we're living in uncertain times with threats of a recession, war, higher living costs, and the list goes on. So how do you navigate this uncertainty and thrive in these challenging times? During times like we are experiencing, many tend to sell their stocks or stop investing altogether out of fear. But in doing so, they follow the roller coaster ride of a volatile market. Smart investors, on the other hand, do what Buffett recommends, and that is to invest when others are fearful, because it's too late to adjust your portfolio after a stock market crash has begun, and the same can be said for a bull run. I urge investors to embrace the current uncertainty as we are turning the corner in the stock market. If you navigate it correctly, you'll set up your financial future for years to come. This is the important one. That was the low, that 7350, which was higher than that bar there. So it says to me that we're likely to see a move up. That's what I'd like to see you do in the second half of this decade, is have a smooth ride around the next stock market crash, because it will happen. So let me ask you a question. Are you going to invest so you can take yourself into the next bull run?